Happy Money Monday. Steve Charlton here, as always, to help you become wiser financially. Folks, it is earnings season and options expiration week for the month of April. Now, historically, both of these events have often become extremely bullish. Stocks typically rally into earnings and option expiration week, and yet the markets are doing what we're experiencing right now. Now, there's a chart that we're sharing down below that we would love for you to take a look at, really just for your own knowledge and recognition, if nothing else. You see, folks, when a pattern has a lot of historical precedents, and when those patterns stop working, it can often indicate that there's potentially serious shift that is taking place under the surface of the markets. Remember, we're in a significantly overvalued marketplace right now. That, according to the Shiller PE index ratio, which is the tool for just about every economist and hedge fund out there, as well as the debt to GDP index from Warren Buffett, significantly overvalued. So if you think of the iceberg and that only 10% of is above the surface and all of that underneath is there. So we have to understand that as historical consequences behave radically different, we have to be prepared and be prepared properly. Again, as always, we are here just to educate and make you aware of what's going on so that you can be prepared, and that you can be ahead of the curve and get out in front of these things before they become a problem. We just want to continue to speak truth out into the marketplace so that you can be better for tomorrow. But let me quickly explain what index expiration means to provide greater context. And the reason I want to do this now is because today, United States investors are going to be getting a brand new stock market fear gauge. Today, when the CBOE rolled out an index that will track implied volatility using options contract with less than 1 day left until expiration. The new product called the CBOE 1 Day Volatility Index starts today. And since the beginning of 2022, trading in options contracts with 1 day or less until they expire has massively exploded. Traders call these products zero DTEs, which is short for 0 days until expiration. The new index is being released as some market experts worry the CBOE Volatility Index, widely known as the VIX, they worry the VIX is no longer offering a complete picture of how volatile traders expect markets to behave. The VIX closed last Tuesday at 1683, its lowest since January 3rd of 2022. The gauge has lingered around those levels ever since CBOE started offering the CBOE S&P 500 9-day volatility index, which incorporates volume and options with 9 days or less until they expire. This is important for you to know because most zero DTE trading is done using options contract linked to the S&P 500. But investors can trade weekly option contract expiring every day of the week, even from other popular equity indexes, including the NASDAQ. The timing of the new release comes as zero DTE trading volume has been rising incredibly. Trading in zero DTEs has climbed to 43.4% of the total option value, an increase that has been driven by a surge in the buying of calls. Call options that expire within 24 hours now represent more than half of all equity call buying over the last month. You see, call options give the holder the right, but not the obligation to buy the underlying asset at a set price at a certain time. It can be used to bet that a given index or security will rise or fall. Once seen as a high-risk product, they're now favored by retail traders. Zero DTE index trading has surged as a growing number of institutional traders have now embraced strategies using options contract on the verge of expiration as well. According to JP Morgan, institutional trading now represents the most of all activity in these options. However, others have described zero DTEs akin to buying lottery tickets. A recent study from the University of Munster found that since May of last year, retail traders have lost an average of $358,000 per day. According to their study, it says a cautionary tale against unrestricted access to highly complex trading vehicles by investors who lack sufficient financial education. U.S. stocks finished lower Friday, which will mark the second week loss in 3 for the main U.S. equity benchmarks. Still, the S&P 500 has barely budged since mid-February and really appears to be stuck in limbo in a tight range between 3850 and about 4150. The Dow is slightly lower and the Nasdaq edged down less than 0.1%. So be prepared. Understand what your options are. Understand why things are important to you. Because as we always say, if you understand that you're the CEO of your assets and you act as such, having more information, having more knowledge, having more wisdom is going to give you the opportunity to have the most amount of success. As always, we're grateful that you tune in. We're truly hopeful that the relevancy of our messages is able to assist each of you achieve your own definition of financial success. As always, our team stands available to answer any questions that you may have or other professional insight, which always starts best with a 15-minute conversation, so feel free to click the calendar link below. Until we speak or you see me again, have an amazing rest of your week. As always, thank you and God bless.